Thank you for joining us on our Wednesdays retirement roadblock series. Today's topic is on Medicare or health insurance in retirement. And, kind of flip the term. So we're a lot of Medicare agents, we call it Medicare instead of health insurance, but it is health insurance. And how costs, unexpected costs that will come to our folks that are retired. So we have Brandon Haig with us, our friendly expert here, and he's going to go through this. And if you have any questions at the end, type them in, and I'll try to open it up to allow folks to talk. I'm having little problems with that, but please, type in your questions if you have any, and then we'll be glad to answer those. Brandon, take it away, my friend.
Awesome. Thank you, Bernard. And thank you to all of you who have joined us. As Bernard said, we're going to cover a little bit of this healthcare risk as it applies to clients. We're going to actually go through the video, how you have some tools now available to you to help talk about and discuss this risk. Also, at the end, I'm going to give you a little taste of a sales idea of how can we help clients above and beyond the Medicare insurance to prepare for some of these risks and the costs that come along with them. Before we dive in though, I want to set the stage and give you guys a little bit of news. We've had this for the last couple of weeks, but I want to remind or share with folks that haven't seen it because it's important. 2 weeks ago, BlackRock did a report, a survey on clients that are saving for retirement and what are they looking for when they retire. So they did a survey of 401k participants, and what they found was 89% of them are looking for protected income as they move into retirement. As these baby boomers start to retire, they're looking at ways that they can generate protected lifetime income. That's where these products come into play. 90% of them said, you know what, if I had one, I would be in a better financial position. What this article says is that 401k companies have heard this, and they're going to start to try and figure out how do they get in front of this trend? How can they retain the assets that these people have been saving for so long through a protected income-like product? Trick is, not a lot of them are going to be able to use the guaranteed protected income that you have available to you. So as clients are thinking about retirement, they're looking for this. And now the large 401k companies are trying to figure out how do they battle against folks like you, folks that have access to these protected income products, because the clients are going to start to move their assets away from 401ks and into products like this with the financial professionals that they work with. You can get ahead of this and start to talk about this with your clients. Now is a great time because another little news piece, the Fed decided that they are going to increase the rates faster than we thought. Now, what does that mean? Well, it means two things. Number one, it means bond prices are going to go down. So if you have clients that are using bonds with their investments or with their financial advisors or anyone that's managing this, those bond prices are going to go down. That's what happens when the Fed rates go up. What else happens? These fixed indexed annuities, the index products that provide lifetime income, they go up. As rates get better, guarantees get better. The products themselves get better. So what does that mean for you is as you look at leveraging these protected income products, they're only going to get better here in the future. And the bonds, their main competitor, is going to start to go down. So getting yourself ahead of the game by using these tools, these conversation pieces are going to put you in a really strong position to help clients and drive more revenue going into the back end of 2021 and into 2022. So both of those things are really, really good for folks that are positioned for these types of products. That's the news update. So let's move into what we're going to actually be going through as we plan today, which is we're going to quick recap. Then we're going to talk a little bit about healthcare risk. I'll share with you the video that you all have access to leverage with clients, as well as then, as I said, a potential solution that you can help clients with, and how it works when you compare it to some of the other options that are out there, like long-term care. This is a very different approach, and it's actually been really, really attractive for a lot of clients that are thinking about, how do I prepare for potential medical costs? And then we'll preview next week and a little bit down the line. But as we always do, we'll reground ourselves in the retirement roadblocks. What is it? It is the platform that IAD has brought to you to simplify your success, to help you have some of these conversations around the risks clients face. Remember, this is product agnostic. It is not leading you towards a product. That is up to you to have that conversation. But what it does is it allows you to have a conversation with clients around these 7 risks. Now, many clients have heard 1, 2, maybe 3, but sharing all of these risks allows you to take a holistic approach to say, here's my way to educate you. It's not asking for the business. It's not asking for a product. It's saying, here are some of the things you need to be thinking about. If you haven't thought about this, let's have a conversation and see where it goes. To help you do this, there are a plethora of resources. We've got calculators. We have the videos, one of which I'm going to show you for every single one of these risks. There's a presentation already approved, already written, that you can use with clients either on a webinar, whether it's as we get back to live in-person events. You can leverage to, again, help have this conversation. If this is something that you're thinking of committing to, and you're thinking, wow, there's a lot of money on the table that I could be helping clients prepare for retirement with, these are all of the tools that you would need to go ahead and start having these conversations. If you're thinking, I've heard of some of this stuff, I don't know a ton about it, we have the white papers available. They're 5 to 6 pages for every single one of these risks, and it'll break it down to allow you to educate yourself really quickly on what are the risks and how do we actually prepare for them, and how will they affect clients. All of that exists. It's already available, and you're going to be able to get to it because you work with IAD. You're not going to have to pay. You're already part of the IAD family. To simplify your success, it's already available for you to go ahead and leverage. But let's get into the healthcare. So we've talked about 5 of these retirement risks so far, and out of all the risks we've talked about, healthcare is the single most difficult to plan for because we don't know. We know maybe some family history. We know what we've seen our parents or siblings or grandparents go through, but it is the unexpected. And so let's take a look at the quick video that we have to introduce the healthcare risk, and then we're going to talk a little bit about what we can do.
When planning your retirement, there's a lot to think about. From how much you need to save, when should you start taking Social Security, and what are you going to do with all your free time? Yet, all too often, retirees are surprised by one major expense they did not account for: healthcare. Today, we know that healthcare can be a major expense for retirees. In fact, the 3 largest expenses you will face in retirement are housing, transportation, and healthcare. So making sure you have planned for it is important. Why does it catch so many off guard? For starters, many assume that Medicare will cover all their healthcare costs. And while Medicare does provide for healthcare coverage in retirement, it does not cover everything. Premiums, deductibles, co-pays, co-insurance are just some of the costs you will be responsible for. Furthermore, if you want coverage for prescription drugs, vision, and dental services, you will be required to purchase additional coverage. And don't forget, Medicare doesn't cover stays longer than 90 days in a skilled nursing facility. So how much can you expect to spend on healthcare? The amount you spend on healthcare will generally increase as you age. Today, a healthy 65-year-old couple will spend about $12,052 a year in out-of-pocket healthcare expenses. At 75, that will increase to $21,706. And by age 85, it will jump $37,839. That is over 3 times what they spend at age 65. Why a jump? Imagine your retirement as having 3 distinct phases. The first phase is what we call your go-go years. During this time, you are living life to the fullest. You are traveling, playing golf, spending time with your family and friends, doing all the things you look forward to doing in retirement. During this phase, you tend to be healthy and living independently. But as you age, you will enter the second phase of retirement called the slow-go years. While you still might be able to do all of the things you were doing before, now it takes a little more energy to do them. Driving might become a little more difficult. You are moving a little slower. Those aches and pains start to act up a little more, requiring a few more doctor visits than before. Finally, the third phase are the no-go years. During this time, you may no longer be able to live independently. Things such as cleaning your house and grocery shopping may require you to hire someone to help, or you may need the support from a nurse or family member. It is during this phase when healthcare costs really go up. Your financial professional has products and strategies to help you plan for these costs, such as insurance products commonly referred to as linked benefit products. These products combine life insurance with long-term care benefits, allowing you to access benefits to pay for services such as skilled nursing, in-home care, and medical services. Additionally, there are other insurance products, such as a fixed index annuity, that can increase the income you receive should you no longer be able to care for yourself. Then there are Medigap policies that can cover some of the expenses that Medicare does not. Ask your financial professional if these products are right for you.
All right, so that video,
When planning your retirement,
starting again. That video is something that you have access to. I know a lot of you are already having a lot of these conversations. If you want to start getting the word out passively, leverage this on social media. Leverage this when a client comes into the office or before you have a meeting or an event. This can help basically introduce the idea and some of the ways that you can have that conversation. But let's talk a little bit about what the video covered. As we age, we know that out-of-pocket healthcare costs go up. That's a given. We know that, that's proven. So as a result, as the video stated, a healthy 65-year-old couple can expect just over $12,000 a year in annual out-of-pocket expenses. But by the time you get to age 85, that number is going to triple, just short of 38,000. So why? Why such an increase? Well, if you look at your retirement, as they say, there's the go-go, slow-go, and no-go years. And during those go-go years, you're retired, but you're healthy, right? Every day is Saturday, right? That's when you can do golf. That's when you can go fishing. That's when you can get stuff done. Every day is Saturday when you're retired. Before that, Saturday is just kind of the day you try to get all your stuff in before you got to hit those chores again on Sunday and back to the office on Monday. Then you go in and you've got, after your go-go, you've got your slow-go. You're still getting out and around, but things are starting to slow down. You're maybe not taking as many trips. You're maybe not going as far. Some people just decide, planes aren't for me. As you start into that phase, you're going to start making more trips to the doctor. And then finally, in your no-go years, living independently can really become a challenge. Excuse me. At each of the stages, though, your healthcare costs go up. And so as you can see, by the time you hit that 85, your healthcare continues to increase. And this is based on what we've seen in the past. Who knows where healthcare costs are going to go in the future? As we've seen, healthcare tends to inflate a lot faster than, say, your average inflation rate. And so these projections could even be low for clients that are thinking about what to do in their retirement. If you remember back, we talked about in our longevity risk discussion that a couple now, age 65, has a 50-50 shot that one of them is going to hit that mid 90s, a 25% chance one of them is going to hit 100. And so as you think about that, that creates a retirement of, well, if you retire at 65, 35 years, which can inflate those healthcare costs even more. And where some of the risks and some of the things people don't necessarily think about is, as you get older, and if you extend your life expectancy past the 100s, just a few months ago, the oldest living American passed away at the time at 115. When she was living, she and the late ages started to get dementia, unfortunately, and needed some in-home care. Well, the person taking care of her was her daughter, who was actually 87 years old. And so the older that Americans continue to live, the more that this idea of needing assisted living is going to become more and more important, and who's going to be available to take care of them. Research shows that nursing home costs are approximately $7,700 a month, and that assisted living facilities are approximately $3,600 a month. So if we look at the national median cost for a private room in a nursing home, it amounts to about $92,000 annually. So many of us don't plan for these healthcare costs, but the financial cost of not doing so can be devastating. So we have to plan for contingencies and some other options for ways to offset these costs and to help people pay as they move towards the late stages of retirement, that no-go years. Recent studies show 70% of people are going to need something like this, and you can help them. I know you guys are already experts on the Medicare side. So what I'm going to bring to you is an idea, an option that's outside and an addition to that. So what options exist out there? They talked about it. There's Medicap, Medicare policies to help bridge some of those gaps. There's different life insurance policies that have a long-term care rider built in. There used to be plain old long-term care, but if you look at it at the industry recently, there's maybe about a dozen carriers that still offer long-term care. And even more, those policies have been increasing because what happened is, well, insurance carriers underestimated how much it would cost for people to leverage long-term care. And they underestimated how long people would live. So we're seeing these policies get more and more expensive. And I think all of you know this, but insurance is one of those weird products that you purchase hoping never to use. You know, we have auto, we have home, but gosh, I really hope my house doesn't burn down. But if it does, I'm protected. The only one that we know we'll use is permanent life insurance. That'll pay out. We know that. So what are some other options that clients can leverage where if they don't use it, they don't have to basically say, well, there goes that money. I'm going to share with you how a fixed indexed annuity designed for an enhanced benefit can actually help clients. So here's a sales idea. It's called enhanced income. And basically what it means is some FIAs that you have access to today are designed for accumulation and an enhanced benefit. So what that means is the client has access to an enhancement of their account value, oftentimes up to 125% paid out to help if they run into needing at-home care. If 2 of the 6 ADLs are the client's not able to do those, they can have access to an enhanced benefit that will pay out in 5 payments over 4 years. And it will allow the client to offset some of those payments. What's really nice about this is if the client passes away before those payments are done, the payments go to the beneficiary. It's not gone. If the client never needs to use this, the money goes to the beneficiary. It's not gone. It's almost a way to self-insure some of these healthcare costs. And what's nice about a product I'm going to show you an example of in just a second is this can be used for in-home care. Many options say you have to be in a qualified facility, but as folks are getting older, they're living longer in their homes. These go-go and slow-go years are getting a little bit longer. This at-home option is becoming very attractive for folks. This has that ability. Now, I'm going to show you an example of this in just a second, but I'd be remiss to say there are other options that are available that you have access to for clients that want to generate protected lifetime income that have what's called an income doubler. So if the client, while they're taking income, if certain conditions are met, they can, for a period of time, double their income and leverage that to help offset some of these costs. Now, that's something that if you're thinking about that and you have a client that's interested, call Bernard, call your IAD marketer. We'll set up a meeting and we'll talk through them because they're a little more complicated than this straightforward example I'm going to show you. So this would be a one-off that we'd talk through these, and we'll get you educated and fill you in on all of how these work. But I want to show you this specific product that you have access to. And this is a real client situation that I'm working on with a financial professional right now. The client, to give you some background, the client is currently 73 years old. They actually converted a portion of their house into basically an apartment for himself, and his son lives in the attached house. They made the garage his apartment. His family lives with him. And he has about $131,000 that he wanted to earmark for potential in-home health care should he need it. So with a fixed index annuity, you know you can't lose. Zero's your hero all the way. So what this product does is it allows him to put this money in, get equity-linked returns, and have it available if he should need it. And if he should not, it's protected and it can pass to his beneficiaries. Let's take a look at how this works. As I said, he's 73. He's got 131 that he wants to put into this. If he should not be able to do 2 out of the 6 ADLs as he gets older, he will have access to 2 options should that occur. He will have access to either his accumulation value or the payout benefit that is paid out over 4 years in 5 equal payments. Now, what that means is, let's say he gets to age 88, 89, and he gets sick, and he can't do 2 out of the 6 ADLs, and he would like to have some in-home care so he doesn't have to go to a facility, but he doesn't want to be a burden on his son or his son's family that live in the house attached to it. He has access to now $229,000 instead of his 131, or he can take 5 payments over 4 years of $57,441. So if I'm going to do quick math here, I've got my my calculator. He invested $131,000. He has either the 229, or if he elects for these ADL payments over the period of 4 years, he can have access to $287,205 to help pay off some of these bills. Now, what that means though is, let's say something, he got sick, it was progressive, it happened fast, and he passed away after the first payments of the $57,441. What does that mean? That means his son, if that's his beneficiary, is going to get 4 more payments. He had access to it. He got his $57,000 that first payment. His son, over the next 4 payments, is going to get another $229,000 as a death benefit. Let's say this client never got sick, didn't need it, or passed away before an ADL was met, well, what happens is the death benefit gets paid to his beneficiaries. The money's not lost. The money wasn't paid to an insurance carrier for the coverage. It passes on at that point. So what this does for clients is it allows them to take a portion of their funds, put it into a protected product where they cannot lose no matter what the market does, no matter what the bonds do. Zero, as you look here, is the worst that they can possibly do. And then when and if they need access to it, they can get access up to 125% above the current value, helping them pay for some of those expenses. And again, if it so happens that they pass away before all 5 of those payments are paid out, their beneficiaries continue getting the payments uninterrupted to fully get the investment back to the client. Really great way for clients to essentially kind of self-insure some of these potential needs down the line. And again, you have this available to you. If you have a question or think, wow, you know, I have some clients that might really like an option like this, reach out to Bernard, reach out to your IAD marketer, because one of the things that IAD has done as they continue to say, simplify your success, they have built a team to support you all the way from looking at the clients that you think might be a good fit. We'll do a case analysis. We'll talk about what clients are right for some of these and what clients you work with that would be good to approach. On top of that, we'll educate you. We'll walk through and we'll say, here's how I would talk about this with a client. Here's how to approach this topic and present it. You be the client, Bernard and I will be the agent, and you ask us questions so that you feel confident that you understand the product, that you know what kind of questions might come up and how to answer them. So you can feel confident that this is a good fit for the client, that you understand it, and that you can bring value to help them solve some of these issues. On top of that, we'll take care of the back office admin side of things. We'll get you through to be appointed with the carrier, to go through their training so you are double educated on what the products are. We'll help you take care of the illustrations, the applications. We'll make sure everything is compliant, processed, and all you have to do, talk with your clients, present these solutions, let them decide if this is a good move for them, and then wait for us to send you the check. Pretty simple process. IAD has made it as simple as possible. We have full teams here ready to help out. Excuse me. Been talking so much, I got a tickle in my throat. Coming up, oh, we have a question. How does this impair life insurance with enhanced coverage? Good question. So this is for folks. So if you have life insurance with enhanced coverage, that'll allow you to access some of the death benefit early. In some cases, clients aren't able to get underwritten. This is going to be something that requires no underwriting. If that you have a client that this might be a good fit for, we've got a life insurance team and we'll put apples to apples to say, if this is the amount that they have, let's look at what an annuity could do. Let's look at what life insurance could do, and we'll be able to put it in front of you that you can make that choice. What we found though is more folks are trying to avoid going through the underwriting, the blood taking, and so this, where you don't have underwriting, tends to be fairly attractive for some of those folks that don't want to go through that. But both can be great options, and we'll compare both of them for you if you've got a case that you want to talk through. Absolutely. Barrett is my counterpart on our life side. We'll bring him in and he'll be able to talk through both options, so you are fully aware of what exists out there. Either way, IAD is now able to help you on both sides of that coin. If it's life insurance, IAD's ready. If it's a annuity product, IAD's ready. So great question, Jay. And, I hope to show you in a case down the line here of exactly how they work together or separately. But coming up, that covers us for the healthcare side. We've got taxation, and that's the last one of our retirement roadblocks coming up next week on July 7th, coming back from the 4th. We're going to talk about how do you approach clients and have this conversation. It's going to be a fun little role play that Bernard and I are going to be able to work on together. And I can show you a little bit about how, when I was an advisor, how did I talk to clients about it, and how do we coach advisors and agents on how to have that conversation today. On July 14th, it's going to be a little bit of a shift. We've been talking about retirement roadblocks. We've been talking about all of these tools and resources you have. We're going to show you another one, totally free, that allows you to educate yourself, your clients. It allows you to put your face, your name, your heading on some already approved pieces that talk about the ins and outs of protected lifetime income. And then on July 21st, we're going to bring in a guest speaker, hopefully from Athene, that's going to talk a little bit more about their specific products. I'm excited for the lineup we have coming through this summer. This is a great time, as I mentioned at the beginning, to jump in and take a look at this. I think there's an old saying that says, when's the best time to plant a tree? And the answer is, well, 20 years ago. The second best time is yesterday. And the third best time is today. So if this is something you're thinking about, reach out to Bernard, your IAD marketer. Here's Bernard's info. They're going to be able to get you set up. Hopefully this isn't the last time you'll see me, because I am attached at the hip with Bernard as we go through all of these cases, as we're working with agents. The list is growing. We're seeing more and more cases, applications starting to come through. And I'm really excited to see where this can go as IAD continues to simplify your success. I got it in 3 times.
Thank you, Brandon. As always, it's a pleasure to have your insight with us. And say, Brandon, he's a great guy, and I always say he's a genius with annuities, with this guaranteed protected life income, and he is. And that's why one of the things we partner with Brandon here is to bring more value to you, and to bring value to what you're offering your clients. And in particular, because like I say, most of us are Medicare agents. Medicare and its retirement roadblocks actually go hand in hand, because if your clients run out of income, that means they will not be able to afford their med sup or their medications or their Medicare Advantage plans with those out-of-pocket expenses. So that's why, we bring this to you all, so we can get you going and have you take better care of your clients, so that when they're speaking with their financial advisor, we don't want their financial advisor trying to take your Medicare clients. We don't want that. We want you to take the client away from the financial advisor for the guaranteed protected life income, because unfortunately they're not having that conversation, but soon they will be. So like I say, we're going to keep bringing this to you every Wednesday, and we have a lot of good stuff going for you guys. And thank you, and God bless, and everyone have a great rest of your week. Take care now, folks.
See you guys.
Bye.